All right, everybody, welcome to tonight's coaching session. Tonight we are going over how to scalp your option contracts and also being able to scale in and out of your trades and basically become profitable or how to save your um, losing trades, right? Being able to scale in and out and averaging price up or down depending on your direction. So today, let's go over that, particularly for Piton today. So I posted it on the main chat right there. Based on this trade, we took short. Let me see. I think we took a short right about this level right here. Would you agree, GN? I think that's when it
Yeah,
first climbed up, and we were trading on a 5 minute. We were looking
yeah,
at the 5 minute here, and we took this trade based on this consolidation, right? This boxing right here. We took that trade. But one thing that we kind of underestimate or kind of gone over, forgot about not breaking the 10 and 20 SMA, and we're looking for the basket, right? And so we got a little excited there. We had kind of too much of a short bias, knowing that Piton is a pretty much a dying company, right? We know that the CEO was stepping down and they're stopping their bike production, and there's a lot of bad news about it. The only thing it's got good going for itself is potential takeover from another company. So we shorted around this level. So if we were to draw that line, okay, right around here, and as you can see, we were entering and expecting that this pre-market high right here would reject as it did right here, right? So that was the analysis based on that trade. And if we were to look in a bigger time frame, let's say an hourly, which is my time frame I prefer to analyze my trade, and as you can see, we weren't we weren't technically wrong on that entry because as you can see, there's a lot of resistance right here, right? And if we go further on a daily, so let's look left is 33.95. Let's look on a daily and let's go left right here. Okay. So as we can see right here, that was a pretty decent entry, right? That was a resistance level, but obviously everybody was thinking like good news, take over, and potentially new CEO, and everybody got really excited to buying it up. Um, Underestimating also that we have a potential gap fill right here, right? This whole gap from this low, right? And then we have an oversold situation. So underestimating that for this push was where we went wrong. But as far as the trade entry was correct as far as the read. And since we were on the same trade and I went green on this particular trade, is because I was able to identify like, okay, it's pushing, let's find another resistance level. So each time it breaks, like as you can see right here, right? Each time it breaks the major resistance level with the strong push, and you guys have heard me explain this before. Whenever a stock like hits a resistance level, what you want to see, right, is this long wicks, which is it presented itself. So that was a good conviction. But the moment it breaks, we want to see a skip up, which is that's what it did, a big green candle. Two things could be happening here. This is a short cover, a tiny little short squeeze. And what you want to see following that little tiny short squeeze was the next slam. Since this candle didn't slam, I immediately cut my trade, right? Sizing down, and I tried again right here. So the concept of my scaling in, so I'm gonna write this here. All right, not that. Text. Let's go. Okay. So basically the first trade for this example, and you know, let's just say I did 10 contracts, right? on this first trade. Okay. And I immediately exited out, close. Okay. And then the second one, number two, we'll just one and two. We'll just do that. 110 contract, and then I closed it the moment it broke that level, right? And then the second contract I went 20, the second entry. Okay. And then what it was doing, okay, so hopefully here, I'm gonna get fancy here. 11. Let's do 16. So you can see, and then we're gonna go white. Okay. Okay. All right. So this the second entry. So we're gonna get rid of all this stuff. I'm just gonna try to make this as clean as possible, so you guys can really fully understand what's happening here. Okay. So first entry was right here, and then exited right in this candle. Okay. And then I re-entered right here. The reason being is that is the volume profile resistance. And if you look left, let's go add another line right there. And let's look left, which is 3705, right? And you guys, and you actually, this was live. Like we called this out 37, right? Remember that part? So 37, I was saying, hey, 37 is going to be your next level to re-enter. The reason being is if you look left, this is the top right here. You see that, right? This is the top right here. Okay. So basically, yes, I didn't wait. I didn't wait for the 10 and 20, right, to curl down as you should, right around a perfect entry would be like this situation, right? You have that upside down basket, the 10 and 20 starts to curl. That's the perfect scenario, okay? But sometimes when you trust your chart based on all the history that I've done, go back to daily, okay? Sorry if I'm jumping around. Let me um let me know if I need to slow down if I'm moving too fast for you guys to keep up. Okay, this is important. So as you can see right here, right, 37, we called that out. It's like, all right, I've been calling it out. Hey guys, I'm out. I'm out of Piton. I'm gonna wait until 37 to re-enter for a put. All right. I disclosed that, and I believe I called a $35 put target. So then what happened at 37, it did start to turn, okay? As you can see right here, this level right here, it started to turn, right? And I was like, okay, great, it's working, okay? And we were in this trade. So remember, I went with the
Hey
10.
TJ,
Go ahead.
when you click on the different time frames, when you go up there and actually click on them, can you just call out which ones you're doing? It's mine's really small, so I can't really see.
Okay. Okay.
Thank you.
Yeah. So this is the 5 minute time frame. So when we got in right here at the 37 price point, remember, so I got stopped out on the 10 contracts, and this stop out wasn't wasn't a 30%, right? It was like whatever it was like 10 or 15% or something like that, right? And so I lost about 10 or 15% on this 10 contracts. And this new entry right here, the $37 price entry, I went 20 contracts, okay? And obviously I went more than that, but I'm just giving you the examples of how to do it properly. So on this next entry, I went 20 contracts. And this 20 contracts was actually up by like, I don't know, 16% or something like that. I didn't take the trade because of how you see right here, the 10 SMA is starting to curl, right? I was expecting a follow through with the 20 as well to start curling, but it didn't, right? Again, underestimating this 20 SMA, which is stronger when it's pointing straight up like this, okay? Yeah, the 10 might be getting weak, but the 20 is still strong. That's still a buying momentum. So therefore, I didn't take that profit, but the moment it broke above again, remember, I'm looking for the behavior. Same behavior what happened here. I'm looking for a behavior similar here. And when this candle shot up, that big green candle right there, and immediately got rejected with that long wicks at the top, I was like, you know what? I'm just gonna hold. But the very next candle popped up again, and that's when I stopped out. Okay, I stopped out right there and took another loss on the 20 contract. So then the third entry, okay, so the third entry was instead of uh, instead of 40 contracts, I went 50 contracts. Okay, and this one is a loss. Stop loss. We'll just call those stop loss. Can't type today. Okay, so 50 contracts. So at the next entry was actually right here. Okay, right here. So here's the crazy part. Okay, and this is gonna be um, where you have to mitigate your emotions because you're sizing up now, right? This is being able to size in and out of your trades, and this is also called recycling your positions, right? You're cutting it because it's going against you, and you're putting it back on with bigger positions because instead I'll explain to you the average of your contracts from there. Okay. So why did I enter right here? So we'll do another line. We'll do another line right here, and then we'll go left. So just 39.23. You go in the daily. You look left again. What is 39.23? Okay. Right here. If you look at 39.23, about 39, $40 basically. This level right here. Okay. This level right here. So remember, each ceiling or resistance level is a potential reversal. So one um, psychology you have to think about is each time, whenever a stock becomes like super extended, it just keeps going up like this, right? It's gonna hit a ceiling. In one of these ceiling right here, it's gonna rug pull on it. Okay, this is called stair step up and stair step up, elevator down. Okay. I've seen this happen so many times, and that's why I just have to get one of them right. Okay, I just have to get one of them right. So therefore, I knew that this, as the stock becomes overextended, the pullback is typically about a 50%. Okay, we talked about a 50% ratio pullback, right? So I know as I get higher and higher and higher without the stock pulling back enough to justify a pullback before it runs up again, right? It's gonna do a big rug pull. So therefore, as I get closer and closer to my resistance level, which is my resistance gets stronger, right? Because it was weak here, now you're approaching a more reliable resistance level. So therefore, I'm sizing up. Okay. So going back to this level here, I know you guys are gonna have a ton of questions here after this. Uh, okay. So all I'm doing is I'm flipping through the daily, right, time frame, and then switching back to the 5 minute so you guys can see it from the zoom in perspective. And I can even go into 1 minute, which is what I look at as well. Okay. So therefore I scaled in right here. So instead of the first 10 contracts was a loss, right? Not 100% loss, it was like 10, 15. The same thing on the 20 contracts, and now I went 50. Okay. And I'll give you guys an example on the numbers itself. So therefore, when this um, entry right here with 50 contracts, it went green and right about here, right about right here, because I know this was a hard resistance, right? I doubled up again. So I went from 50, and this is why having an account with bigger size account is very important for this particular strategy. This is high risk, high reward strategies. Okay. I don't recommend this to new traders, but I'm just sharing with you guys. You can do this on a small scale. Okay, you can do this on a small scale, like you seeing me with a big P&L on these trades, but you can replicate the same practice with a smaller account, but instead of having 10 contracts, you can have one or two, and you can go from two to four, from four to eight, right? Your account can still handle that, especially with like cheaper contracts like Apple or Microsoft, right? So at that level right there, I went 100 contracts. So I went from 50 to 100. So I just doubled that. And this pullback right here was wiping out all of my losses. Okay. And also another key important part to pay attention to is when I bought these contracts, I'm buying the $35 puts instead of buying way out of the money, like maybe like a 30 or anything below that, right? Because the reason for that is if you buy way out of the money, like the 30 or below, right? Your contract price is not gonna respond to these candles as sensitively as possible. Like they're gonna move slower. But if you buy closer to the money, your contract premium or value will fluctuate faster along with the candle. So these small moves right here was able to give me around, it was like 20 or 25% of my contract value. So therefore, with the 100 contract and a 25% gain, was able to wipe out all these losses. Okay. And this is why it's important that you do not deploy more than this. In this particular case, I was all in with the 100 contracts, right? I was probably about 20% of the total account. So put that into perspective, 20%. So that means my first trade was about a 2%. My second trade was about a 5%, right? Or 4. And then this was about um, let's just say 8%. And then I just scaled up and doubled from there. So it's about 20% altogether, right? It sounds like I'm going all in, but I'm not all in. I'm actually still managing my risk, but I'm able to manage my average and my losses, just wiping out in one trade. Okay. Um, Let me see. I'm gonna try to make an example of what it looks like from a numbers perspective. So let's just say um, this is gonna be. Let's just say this costs a dollar. Okay, $1 per contract, just to keep it simple. And then the 20 contracts, obviously I'm buying the same thing, right? So this is gonna cost 10, 20. Is that making sense so far? I'm gonna try to freestyle it here. So this costs 10, so basically $1,000, for example. This costs 2,000. This costs 5, right? And this costs 10,000. I'm just using a uh, $100 contract for example. Is that making sense so far, guys? So
Yeah, that makes sense.
if I lost
Following.
15%, let's just say 15% here, okay? And then I lost another, let's just say this was a little higher. Maybe you got stubborn, okay? You got you lost 25% there, okay? And then let's say you lost another 20% here, okay? And then this 100 contract you made 20%. This is a plus 20%, okay? So who can do the math here, right? So if I lost 150 here, I lost what is this? 25%. What is that? 250 because that's 2,000, okay? And then I lost, what is that? 20%. So 1,000, is that right? 5,000, 1,000, yeah. And then I made 20% on the 100 contract, which is 20. This is what is that? 10,000. So $2,000. So I made $2,000 on this last contract, making 20%. Do you see what I'm trying to say here?
Yeah,
Is this
I
making
see that.
sense? So I lost 150 on the first trade, right? No big deal. And then on the second trade, I lost 250. Okay, no big deal. And then I lost $1,000 on the third trade. You're like, dang it, like this sucks. But the key part is being able to stop out. The moment you recognize the trade is against you now, you can always get back in, right? With the same, if let's say, for example, here, let's say, for example, that okay, you got out, right? You got out of this trade right here, okay? Or actually this trade. You got out of this trade and you didn't get back in, but it represented itself here, which is a prime setup, right? We talked about being below the 10 and the 20, especially with the crossover if that's another confirmation you're waiting for. You have the basket, right? You have upside down. You're at a major resistance level, right? This is all confirmation up here. Like this is ceiling. All the signals is lining up, right? And you're getting back in here again. Because you're like, you know what? This is the setup that TJ has been talking about. Now, if this is your third trade or your fourth trade, you can do the same thing. You can come in, come back in. Let's say you got stopped out on this trade with the 50 contracts. You're gonna come in here with a 100 contract. Just know that if it breaks above this, you can do your boxing, right? We've done boxing strategies like this. Just know that you have to be strict. If it breaks above here, has potential to room to the next resistance level. And remember, you always want to look left to your next resistance level to figure out how far it can go, right? If the next resistance level is like just here, or they're layered, right, like this, I'm not gonna panic even if it's outside of this box. Okay, I'm not gonna panic because there's layers of ceiling here. It's gonna stall here. What's gonna scare me is if this candle goes like parabolic green and then doesn't come back down 50%, but instead it stalls here. It does this, right? It does that. That's a bull flag pattern. Then I would be like, you know what? It just blasted through all these ceiling. This has a lot of pressure. This has built of short squeeze, algo buyers or hedge fund buyers. Something is going on from the other side that you don't know about that's blowing through all this resistance. So therefore just cut it, okay? But if there was another resistance here, okay? There was another resistance here, like heavy resistance on the daily, believe it, I'm gonna go instead of 100, I'm gonna go 200 contracts there. Okay. But here's the thing, I'm getting further out of the money. Okay. Right. I'm getting further out of the money. If my contract was $35 price target, I'm way up here now. I want my contract price to respond to a small downside pullback. I'm going to be probably buying a 40 or like even at the money or even at 45, right? This is why it's important that you have capital for this and you're not deploying all your capital. Like in this trade, I'll probably max in, let's say I'm pushing the limits of like 30% of my account, right? 30% of my account. But guess what? This little pullback right here, which is I'm gonna expect after this run up, I'm gonna expect it's gonna retest this support zone for a potential move again. But this move on the downside right here is gonna make me 10, 20, 25%, and that's enough to wipe out all your losses. Okay? Is that making sense?
And that's exactly what you did in scalping stocks.
The scalping stocks, like rinse and repeat this process, but the part that you need to really um, strictly follow your rules is when the trade goes against you, just cut it because you can always get back in again. Okay? This is hard to do with if you're on a cash account and you're deploying and getting in and out. The unfortunate part is, those funds will not be available the following day. That's why I'm only sharing this with you if you're above the PDT rule or you can get in out of trades without having to worry about your capital depleting. Okay? This works very, very well. Like I can go probably, 50 to 100 days, green days with this strategy. I just need more buying power, right? And this is the reason I'm paper trading because I'm testing it with options because I know in scalping stocks there's really no time frame. So I can get in and out of my trades as many times as I can and it doesn't affect the value of the contract. It affects the stock price, but not the contract, right? So with the option, I'm learning that I can't keep trading this same style if I remain to buy my strike price gets further and further out of the money because this contract will then be stagnant. Like the value of it, even this pullback right here, if you're way out of the money strike, like let's say, oh, I'm buying $22 strike on Piton, and this pullback right here, instead of this giving you 20% gain, it's probably going to give you 5% or less because you're so far out of the money. Basically, the contract probability of it going there is very slim, so therefore the value doesn't increase that fast. Okay? But if you're in the money or really close to the money, it's already got value to it. It's got a high probability that you're hitting your target, and that's how option contracts are valued. The high probability of it hitting its target, it's already there. So therefore, the value of that contract increases faster because it's worth more to the next trader. Does that make sense? So,
Hey TJ,
yep,
concept wise, it makes sense. In your process here, are you scaling in like this because one, you've identified the resistance levels, but you don't know for sure. You're thinking it might reverse, but you don't know, so you're going small first. And each time you stair step up, you're thinking the higher up it goes, it has to come down, and so that's why you're scaling. You're kind of doubling up your size each time.
correct. So that's one of the key part that you need to identify for yourself is do you have a high conviction that it's going to give you this pullback? Like even this pullback right here, even this pullback was enough to wipe out the first two trades, but I didn't take profits, right? Now as the stock becomes super extended, right, which is in this case especially on the hourly, I mean, you can tell me here, tell me this is an overextended move with no pullbacks, right? A real pullback is
Yep.
a red candle on the hourly,
Yep.
right? So as it gets higher and higher, based on behavior and based on track record, and this is one of the things I always recommend is when I say study your charts, you're looking for behaviors. What did it do in a 5 minute, on a 1 hour, on a daily? How many candles did it take, right? How many green candles did it take to shoot up on whatever time frame before it did a pullback? And I promise you, you will see that on any stocks that you chart. You're gonna see, okay, this candle went, five green candles and it hit a major resistance level, or it blew through resistance one, two, and three. The third resistance, it did a pullback, and then that's all you need. This is all you need. Okay, understanding that kind of behavior is literally why I can scalp all day and not even worry about my losses because the moment this pulls back, all of my losses is gone or minimize. very minimized. And I'm okay. Like even let's say this pullback was only a 10%. I'm gonna take that profit. Okay. I'm gonna take that profit, right? Because I've literally dug myself out of like let's say a $60,000 loss into a minimum of like five. Like I've done that so many times that I am confident on this in this particular trading style. It's just your risk level goes higher and you got to be able to stomach that numbers. Okay.
Yeah.
And again,
Now,
it doesn't have to be deploying thousands and thousands of dollars. This same concept you can do. Let's just say you're doing it on a stock scalping. Like let's say you have a $10,000 account and you're trying to scalp like this with the stock, right? You can do this on a $1 stocks and buy 5 shares, and then you cut that trade out and you do 10 shares. And it's only $5, $10, $20. You see what I'm saying? Like that's very minimal, but the concept is the same.
yeah. Now, in when you're trading stocks, I know that when you're scaling in and out, and when it goes in your way, you add more to your size. In this case, let's say that you didn't have to hit your trade number 4 before it goes your way. You hit it on your first or second try. How do you go about adding to your size?
So
Like,
adding to my size would be a uh, another confirmation. So let's say um, I got in right here with the small size. Let's just say this was my first trade, right?
right,
I'm only, 10 contracts in, worth $500. And I'm like, oh man, this is so prime. It's got room to the downside because you can measure the potential, right? You can see that it could go to this next support line. Okay.
right,
So I would add right here, right? Like you've seen me anticipate a trade and you're probably like, why is he not waiting for this signal? Well, because this is also a signal for me, right? This
right,
resistance level is also a signal for me to take the trade. But the one thing I understand is that my first trade is not all of my bullets,
right,
right? I'm not gung ho going all in, like, because you're gonna if that trade was wrong, you're out of bullets to recycle or save yourself out of a bad trade. Okay.
yeah,
So I get in right here, anticipation of this heavy resistance to reject, which is this candle right here, right? You pay attention to how long these wicks. If you look at all the wicks, all the wicks on this candle is on the top because you're short bias, right? Which candles does it tell you to like get in? Okay, let me clean this up. Okay, so this candle tells me to short. This candle tells me to short. This candle tells me to short. This candle tells me to short, and this candle tells me to short. Okay. If you ever want to short a stock, literally look for this long wicks on the candles. You want red candles with long wicks at the top. That tells you there's a lot of selling pressure right here. Okay. If you're
Sellers are in control.
correct, if you're shorting this guy, you're bound to get owned. Like you don't short into this guy. Okay, because this could be like a parabolic squeeze. Okay, you short into these guys when the moment the candles turns red. It doesn't even have to close, but you know this is a heavy resistance level, and this candle turns red, and it's got a long wick at the top. Sellers are dumping into it. Now, the follow up in that is a panic sell. I've seen a rug pull like this and caught it at the very top because of that red that candle turns red before even the body closes. I'll see a rug pull like this. And if you see a rug pull like that, this is scalping 101 right here. A rug pull like that into a support level, believe it, I'm going to buy for a potential 50% bounce. And this happens over and over and over. Okay.
But with
So,
options, because everything is price level. So if it's going up, you can't be as quick as scalping stocks, buy
cor-
sell buy sell. Here you have to find the contract. You have to add it and then buy. It's so that you're losing that little time.
Yeah. So as the chart, formulates itself, I'm already anticipating an entry here with the contracts ready in my on my phone. And this is all like all the things that you're seeing me with my P&L, that's all scalping trades on my phone. Like that's not fast DOS trader, scalping stocks kind of speed. I just make up the speed by anticipating an entry. So I'm prepared basically. I'm prepared that hey, when it gets to this level, which all day today I was calling out levels of this particular trade. I was like, hey, if it breaks 37, I'm looking at 40, and then the next level is 40. I think it was like 48 or something like that. I'm calling all these levels, and I already have the contract loaded up. So when it gets up there, all I have to do is hit buy, and then I'm in, right? What else was I trying to say here? Well, as far as like buying the contracts, you want to be closer in the money, right? You don't want to be scalping like this and way out of the money. Like I've tested it. It doesn't work. Okay. You can still buy a same week contract. Like if this was, let's say, it's Friday, right? And it expires the same day. You don't want to be buying too far out of the money. You want to be buying in the money or one price out of the money. That's it. Okay. Because or else your contract is not going to fluctuate that fast, unless you're trading Tesla, because Tesla is very liquid.
Hey TJ, so question. On this strategy, are we basically looking for reversals like the whole time, or is there any point where we or you like do a breakout, like it breaks above the resistance, and then we take a long position basically, or is it basically we're just looking for reversals?
This, yeah, you're looking for reversals in this particular strategy in any direction. So if you're long bias or short bias, in this case, I was short bias on Piton. Unfortunately, it was long trade, but I was short bias based on, you know, the catalyst, right? It's this company should be worthless. They have no product production. They're losing their CEO, right? So, and then they're losing members. They just fired, what is that? 2,800 employees. Like the catalyst is like lining up that this should be a rug pull, right? So I can't comfortably chase a stock moving up because the rug pull is going to be painful, okay? It's going to be very painful. So therefore, I'd rather just either respect my levels each time it breaks and just re-enter it again. Unfortunately, it's you're gonna come across to a stock that will do this. I've seen stocks or companies file bankruptcy and their stock just runs 500%, and like the low cap stocks, okay, which is weird. But is any questions? Let's throw some questions out here because I know this was hard for me to grasp when I was first starting to trade, and I learned this strategy from Max, which is another scalper trader that makes millions of dollars on the hot market, and he averages about 25 to 50K on a crappy market like this.
I understood everything you said. It's the part of being disciplined to exit out of a losing trade, which is hard to do. Because if you're short bias, um, that's what's hard to do.
Right. So again, you just have to do it. You just have to say it's not working. I can always get back in. If you stop out right here and you have a red candle back here, your confirmation to get back in, truly confirmation, is like this pattern right here. If this candle slams back down and your 10 and 20 is still pointing up, remember, you have a high probability that's going to spike back up, okay? That is the high probability because remember, this is all buying momentum. That's what the indicators is telling you. There's a lot of buying pressure, right? Until it starts showing this, okay? it starts showing that curl, that's just a weakness. That means the buying demand has gone away, and now sellers are taking over. Okay, so confirmation right here, you can always get back in. If you got stopped out right here, you can always get back in right here. Okay, and remember, when you get back in a trade, you respect a stop above here, but you're sized up here. You're sized up because you're looking to make this trade right here and become profitable. You just have to mentally plan and prepare for this type of move. So basically, I can already picture this in my head, this pattern here in my head, and I'm already in anticipation as it develops. As it develops, I'm already seeing it like, oh, it's the picture is coming to life, right? Versus if you can't imagine this pattern in your head and you're trading here and you don't know, you don't have a visual imagination of what could look like, then you already, one step behind, right? Like I can literally tell you, okay, this scenario right here, this could have been a rug pull because remember, this whole time stair step up, and likely it's going to be a rug pull. I can show some example here. Let me see if I can find one.
Yeah, TJ, if you leave it there, yeah, that's a good example. For me, I would short right there. The reason why I would short right there as well is, like TJ said, it's good resistance. See the volume,
Yep,
and since the volume's decreasing,
decreasing
stop is
compared to here.
actually, yeah, so it's creating lower lows, right?
Yep.
If it didn't create lower lows, then you got an issue. Then
Hmm.
I would get out of that. But since it's creating lower lows and the volume is decreasing at the same time,
Yep.
that's a good sign.
Yep. Exactly. That's a good thing to point out. You can see right here, right? It decreased because it flattened out. So right here is not a bad signal to go short, right? Although it's not presenting our patterns yet with the 10 and 20, right? It's still early on. But right here was also a good signal to go short because it's starting to weaken on the 10 SMA, and this is exactly why I anticipated this resistance right here, and then it did formulate that short confirmation, but it would have been better if it did close a candle below the 20 because then the 10 and 20 SMA becomes resistance, and then the volume fade out, right? You see the volume gone away, and then this candle right here should have told you that, hey, there's still left some fuel on this thing. This could run. And then it died out, and then it spiked up again. And then this candle right here tells you like buyers are coming in. And that's why I'm saying don't buy into a green or don't short into a green candle.
And then the other thing that I see right there is that on that candle and in the high candle, we got that negative divergence happening on the slow stochastic.
Right here. Yep.
You see.
Hmm. Yeah, confirmation of reversal right here. Yep. And then you have an overextended stochastic here, right? We know that whenever it gets to this level, this is like overextended zone. Okay.
And same confirmation with your volume profile as well.
Correct. This is why I use volume profile now, and of course, my number one indicators. Like if I could trade without any other indicators, or I can only choose two other indicators, I would choose the 10 and 20 SMA all day. I could lose every other indicators, slow stochastic, volume profile, the cloud, the VWAP, whatever. I have relied on the 10 and 20 because I put it to the test. When I say put it to the test, that doesn't mean you have to wait for trading hours. All you literally have to do is look left. What did it do here, right? What did it do these days? These days, you just look left, right? You have data. This is all you have to do when you're charting. You're like, okay, it spiked up. It was below here, okay? It was below. And the moment it got above with the 10 and 20 curled up, boom, shot up. Okay, you don't know how far this pullback was, but this confirmation right here below the 10 and 20 with the curl could have caught this small trade, right? This is a safer trade than trying to take a short here with no confirmation. Unless if I draw a line here, I look left on the daily on a bigger time frame, and I look left and there's a heavy resistance to the left, then I'll go to short. And let's check it out. Okay, so let's get rid of this. Draw a line here. Okay, so that's 29.37. So let's look left on the bigger time frame. 29.37. Why did it reject there? Okay, first thing we're looking for is what? Ceiling. Ceiling right there. Rejection right here. Rejection right here. Okay, ceiling right here. Like literally rinse and repeat this process, guys. Ceiling, so layers. So it could have not gone any further, right? If it did, then just know that you have to find your next ceiling. Okay, now you look left. Why did it reject at that level? Now you know. Okay, so that's on the daily, and this is on the 5 minute. Okay, is that making sense? So
Yeah, that
practice,
made sense.
yeah, practice this, guys. Like this is why I'm doing this with options and paper trade account is because like trust me, like once I get full confidence on this, and you know this may shift, the strategy might not work when the market changes again, right? Because sometimes too the contract doesn't abide by the candles, right? We've seen that on, was it Piton too, on the previous trades, like where the contracts was actually like, what was it? I think it was right here. No, that wasn't that. It's multiple days ago. Or when did it start running? Right here. It was this days right here. We traded right around here, and our contract was actually green when the stock was moving up here. Remember that, Gian? I think Grant was on that trade too. But in this trade right here, we were short, and our contract wasn't losing value, and the stock was going up, right? So that's one particular, I mean, that's in our favor, but it can also happen in an opposite way. The contract may accelerate even faster when the trade is going against you. It's just all how the system wants to process it. Okay, let's go with the questions. We got a few minutes. What do you think of this? Does this make sense? Does it confuse you? Do you feel like your head is going to blow up?
I only got caught the tail end of that, TJ. So you know, as you know, in stocks, you could scale in, and it does a nice average for you.
Hmm.
When I did this in options a couple of years ago, I used to try to scale in, but I would still buy the same strike price, so I don't have like a bunch of different contracts at different strike prices. Do you do the same, or do you actually
No,
just buy?
I don't. I actually posted an example on this on Piton. So I posted a screenshot of my Piton trades. I posted it in main chat. So look at that picture and look at the first trade that I did was strike price was $30 put, right? When it was closer, when it wasn't that high yet. So $30 was achievable at that time when the price was at 33. Okay. So I took a loss on that, and then I went to $34 put when the price was at like 37.
Yeah, but you sold it before you got into another one, right?
Yes, correct. So
Yeah.
I
No,
closed,
I'm
I
talking
closed
about
that
like
trade out.
scaling in. Say it's going your way,
Yeah,
right? And you add additional contracts.
yeah.
In the past, I just bought the same strike price.
Right, and that's what I've done that too. That's why I'm sharing this with everyone because I've done that way. And what I've
Hmm.
learned is the further you are out of the strike price,
Yeah.
the less volatile your
Yeah.
contract
Slow.
value is. So
Yeah.
therefore, what I've learned is I close those further out of the money and
Mm.
buy closer to the money, right? Because then I only need a small move to my direction for my contract to move.
So you're actually not scaling in. You're
No,
selling your contract
I'm
and
I'm actually scaling in a different way. I'm closing that. So what I was explaining earlier is that first, let's just say that first trade, that $30 put, I have 10 contracts, right? I would then close that trade and the following trade I would go 20 contracts. And if I lose that trade again, let's say I'm down 10%, I'm going to close that trade and buy a higher strike price contract. The cost will get more expensive, but your volatility on that contract will be greater too because you're closer to the money, right? And then so if I go from 10, 20 to, in this particular example, I went 50, and then from 50 to 100. And that's also another good example why you can't deploy if your first entry, and that's why I always say, hey guys, I got a starter right here. A starter means it's just a feeler. Like I like the levels where it's at, right? My other signal confirmation to get in hasn't been layered. That means it's only at resistance level. The 10 and 20 hasn't confirmed. The candle hasn't turned red or stuff like that to layer all my confirmation. So once my confirmation layers, then I'll size in. I'll scale in and I'll scale in. And then the moment I go green, I'll start scaling back out. I start taking off profit. And then another thing I forgot to talk about is, let's say I got in this trade right here, like 50 contracts, and I went green and then I went red, right? And then the moment I go red and I still have a high conviction that this resistance is gonna hold, I double down. I go 100, right? I'm still red. Let's just say I'm still red 10%. But the moment it goes green, let's say it just goes, 1% green, I will shave off the other 50 or the other 100. Like if I'm 50 and 100 contracts by up here, I will shave off the 50 and leave the other 50. So that means I resetted my my uh my risk tolerance or my risk reward ratio, and I got rid of my red P&L based on this drop by making up
Okay.
with the other 50 contracts.
So when you added that, are you buying the same strike price?
Yeah, in this case it was like I think it was, what was it, 35? It was 35
Okay, so you're not buying a different strike and having multiple
No, because it
contracts.
was it was I have a high conviction on this case that this was gonna be doable on this pullback because again, uh, on a, let me see here, zoom out. So if you were to do the 50% pullback, so let's just say this run right here. So that was there and then here because that was the beginning of the run. Okay, look at the 50% pullback. It's right at $35. So I know this was achievable. So high probability that it was gonna be achieved on this pullback, right? It didn't quite get there, but as you can see, the contract responded appropriately with a nice gain to wipe out all my other two trades. So overall on Peloton, I was only at 4,200 because I had those two other losses. So it was first trade, second trade, and then third trade. And then this was just same strike scale in. Cool? Everybody understands that? Now, all you have to do is go put it to work.
All right.
Thanks, TJ.
All right, no problem, guys. Last questions before we go? All right. Well, thanks for tuning in, everybody. If you like this, share it with other people, or if you have any other questions. Oh, and then also I want to let you guys know, this our Discord has it's open for everybody now. New members doesn't have full access like you guys do. They don't have, mic access and educational resources, but they can come and check us out and, browse around, look at our text chat room conversations, the P&Ls, just to get an idea. Like, because a lot of people are like, what is trading or how do you even, make money and whatnot. Just send them in here, create an invite, and let's build this community bigger so that way we can help more people. All right.
Sweet, sounds good.
Cool, man. Yeah, if you don't know how to create an invite, just go to the top. The name says Day Trading to Freedom. Click that name, and it should down below. It should say invite people, and then just go ahead and click that, and it'll produce a link for you. And then that link is special to your name, so you can go down to the invite leaderboard, right? And then you can type in, I think it was like invites, and it'll tell you, how many people you've invited and how many people left and whatnot, and you can help build the community. And I appreciate you guys doing that as well, so we can help more people. Cool. Right on. All right, see you guys.
Bye.
Have a good night, guys.
Hi, everyone.
Have a good night, guys. Adios.